Welcome back, My Assets viewers. This week we are going to see an interesting topic. The home loans are giving really a tough time for everybody, because the home loan leads to depression for lots of people. So this week we are seeing that why the depression is happening for people and how we can able to overcome this issue. We'll see that. So you and me know that the interest in the scenario has gone up substantially in the last 2.5 years time. We started the 2 years back with the interest rate of 7% for home loan. After a long lull, and then it is in the last 2 years time, it has gone up by more than 250 basis points. That means 2.5% it has gone up. That means your home loans which your people have borrowed at 7, probably now sitting with 9.5%. It has gone up that substantially. So you know that the moment the interest rate getting increased, there are two ways to handle it. One, you can increase your EMI. Other way, you can increase your tenor. Normally, if you don't have the money to repay, normally the home loan people, the lender, will automatically they try to increase the tenor of the loan. For example, somebody in a middle class family, they bought over 50 lakhs worth of a loan from a lender to borrow a property at a rate of 7% interest. Assume 7% for 20 years, probably you might have ended up paying 37,700, some odd number they should have paid. So now the interest rates have increased by initially 0.5%, 1%, 1.5%, now it's 2% plus. Now if it are working at 7%, now if we pay 38,760, probably entire loan period could have repaid at a close to around 93 lakhs. Now if you are sitting with 8.5%, 1.5% increase in the tenor, what could happen? Your repayment period could have gone up to 29 years, 28.9. So that means definitely technically we will call it 29 for easy understanding. So now it is 29 years, it has gone up. That means what happened? The same scenario, if it continues, your repayment will increase by another 40 lakhs. Instead of 93 lakhs, you may have to repay 1.3 crore. That means, 50 lakh loan, you are repaying almost 1.5 times more than your loan amount. So if it is been 9.5%, what should have happened? If it is 9%, what could have happened? 38 years, the loan tenor could have gone up by 38 years. Now imagine a situation like this. You are somewhere at 35, 40, you decided to take 20 years loan. You know that 20 years loan, then and there when I get extra money, I'll try to repay that and try to we'll try to close the age between 55, we thought we can able to close the loan. Now what happened? Because of the interest rate increase, from 7% it has gone to 9.5%. That means my tenor has gone by 30 years, 35 years of time. What can I do that? I cannot do much onto this, because I cannot reduce the tenor because the interest in the system has gone up. So dear viewers, I just want to remind you this particular aspect on this. Way back 1.5 years back, that was in February, March, when the Russia crisis have started last year. We anticipated the inflation is worldwide is going up. So we shared with our viewers my views that the interest rate in a scenario likely to go by 1.5%, bare minimum. So that's why those people are buying a home loan currently, plan for this 1.5% cushion and then try to take a loan accordingly. I just put the link of the video here in the bottom of the description. Please go on the link and check and see that what we have said. 1.5 years back, we said such a scenario likely to happen. I want to, people are in the age back 30 who are not followed the financial industry for quite some time. I'll try to narrate an incident. You should know that, because in US, the subprime crisis started between 2006 and 8. It went to peak because of the real estate prices have gone up. So the lenders have become a little mad. That point in time, we call a term called ninja. No income, no job, no assets. For them, the people have given a home loans. The people have taken a home loans. They don't have a job. They thought before going to home, I have a home. And then they bought. Over a period of time, the price has gone up. People have done the idea that since the prices is going up, it is repaying. Even if you give it for rent, it is easy to repay. So in that concept, people have bought. Unfortunately, what happened? The crisis have started. The entire real estate prices started to shrink. And gradually, what happened? Whatever your borrowed property worth, the property worth has started to crash. Assume you have bought at 25 lakhs. Now the property has 20 lakhs. What you will do? You cannot pay. You are not in a job. You had thought that you were likely to get a job, you bought this property, you have not got the job, your EMI has to be served. If the property prices have dropped, what you will do? You will try to surrender the property. You say, I will become default, I will become bankrupt. Take what they will do? They can only seize the property. They cannot do much because you don't have a job. On that scenario, people have started to repay, and then what happened? The further property prices have crashed. A lot of people ninjas have surrendered their key of the property key, and that leads to a rate of a lot of crash. I think probably this might have triggered the RBI. Why we put this topic, if we decided this topic? Because yesterday in the monthly meet, the Reserve Bank of India spoke this subject. They said that interest rates in the system has gone up by more than 250 points. That means the elongation of the home loans, those people have taken in the floating road, the elongation of the tenor has really gone very, very serious concern. The Reserve Bank of India chairman has spoken to the CEOs of the bank and asked them to come with some amount of solution. They don't want to give solution. They asked, please speak to your board and see that what solution we can give. So that the pressure, not only it is gone with an individual, it is now escalated back to Reserve Bank of India and banks. They are a little worried whether there be any defaults will happen in the system. So that's why RBI could have gone on to that. Let you have to wait and see what the board of the banks decides in our favor, or what they are going to give a solution on that. And you know that because they elongated, though in the interest rates comes down, probably again you will come back, but one impact will be left. What will happen now? For example, you bought a 50 lakhs loan at 7%, you should be paying 38,700 odd. That should be your EMI. Because assume your EMI is 45,000, you are only paying 38,000. What will happen? The 7,000 rupees interest will get accumulated to your only. So that is going to definitely have an impact. 1-2 years of impact is going to be there when you try to close the loan. That will, like, unless the interest rates crashes in the system, grows well below your borrowing cost, maybe the interest rates goes to 5.5%. The 1.5% which has gone high, probably that like to help you out. I don't foresee such a drastic interest rates going to crash. But that is why we see that that when the Ukraine war is there, we seriously put a video and said that please, when you are buying a property at 7%, don't think it's 7%. Probably the interest rate in the system likely to go by 1.5% at least. Please keep a cushion of 1.5% and try to take your loan accordingly. And we'll put it in the description, that video. Please go and see that 1.5 years back we said this scenario likely to come. Now it has come because we are in the industry for quite long years. I personally tracked personal finance for quite long time, and probably even the viewers are watching these videos, you know that in personal finance space I should have written not less than 1,800 articles for the media. Because the 1,800 articles of mine probably have a lot of information I collected over these long years of my life. So that I always used to in advance try to alert our viewers or readers normally. So what now we have to do now, since you have an option of increasing your EMI, I suggest you increase 1,000-2,000 rupees in the monthly budget if you can able to cut down your cost somewhere. So that will give you a peace of mind for you. And that also simultaneously the tenor will not jump like at 8 years, 10 years, 15 years. It probably stick to 2 to 3 years time. When interest rate in the scenario gets compressed, probably you may come back to the original tenor of that. So it is always very dangerous to borrow to the neck, and future earnings also people sometimes they will borrow. We are getting lot of queries from our readers, and what to do, I tell them please use rate conversion. Rate conversion means assume current you are in a 9.4%. If the bank is for fresh borrower, they are offering at 8.4 or 8.5. You can go and speak to your banker or lenders and say that I want a rate conversion, give it me the current rate. I hear from when I said this solution to some of my investors, they went to certain nationalized bank and it has been told to them that we cannot do that. Then I told them, if you are not giving, I will go to some other private bank, they are ready to do a balance transfer at current interest rates. Afterwards they accepted, and then try to, after collecting 3,500, they reduce that interest rate to the current interest rate. So if your bank is telling like that, please go and talk to the branch manager, tell him that if you are not putting it to the current interest rate, I'll do a balance transfer. The moment you say balance transfer, automatically you will get a lot of benefit on that. So this is Suresh Parsadi, certified financial planner, founder, mysetconsulting.com. If you are a first time subscriber to my channel, please do subscribe. And we put a lot of videos in the last 150, 155 videos we have already published. Please watch that. A lot of interesting topics available. If you want to know any topic which it's running close to your heart, please put it in the comment box. We'll try to address that. This is Suresh Parsadi signing off. Bye.